in this video, I'm going to be sharing my 3 tips for first-time investors. And my first tip is before you start investing, make sure you understand your investment profile. And what I mean by this is you want to understand your capacity to take risk, your time horizon, and this will allow you to make sure that whatever you do end up investing in is really aligned with your goals and that you have enough time to realize a good return from your investment. The risk is that you pick an investment that's too risky and you don't have the time to recover from market volatility or a crash. So this risk profile is something we offer for anyone starting up with StockSpot. You come to our website and answer a bunch of questions, and using those answers, we actually point you to a portfolio that we think is right for your profile, your investment time horizon, and also your capacity to endure ups and downs in the market. So my next tip would be, when you do start investing, ideally pick a hands-off solution that you don't need to be too involved in, because that allows you to learn. So an online investing app will allow you to build a portfolio easily. It might help you pick the underlying investments, and then it will help you automatically invest into those assets. It will capture the dividends, it might reinvest the dividends, do the tax statements for you. But by removing all of this administrative burden and really time saving for you, it will allow you to focus on learning and reading and upskilling in this area rather than doing all of the finicky parts of investing, like calculating your tax or doing rebalancing and this sort of thing within your portfolio. So over time, we even have StockSpot clients that decide that they want to be more self-directed and manage their own investments. That's fine over the long run if it's something you really want to be doing, but at least to get started, I'd be doing something a bit more hands-off. And actually related to this, I'd be focusing on keeping it as simple as possible. So with StockSpot, we only recommend 5 investments, even for the most sophisticated of investors. I think a lot of first-time investors really overcomplicate things by picking too many investments, and then they spread themselves too thin, and they end up really not understanding what they're invested in. Keep it simple. You only really need to invest into a handful of ETFs to get great diversification. And certainly as a first-time investor, I wouldn't make it too complicated. And that brings me to my third and final tip to first-time investors, which is keep an investment diary. And this might be a bit more of an unusual one, but for me as a first-time investor, it was really helpful to really track my thoughts about investing, track how I felt each day, track my learnings, and actually it helped me stay accountable for my own goals and what I was trying to achieve by actually writing it all down and actually checking in with myself and reporting on how things are going. And actually I kept my diary, which I still have today. So this is my investment diary from 1996, where I would get cutouts of all the companies I was investing in. I would log all of the shares that I bought and sold and the reasons I bought and sold them. And to this day, I think it's been a great help to always track my thoughts and how I'm viewing markets, because you can get a lot of learnings from that over the long run, and you can actually track the progress of your learnings in markets over time. And they're my 3 tips for first-time investors in the share market or ETFs.